traders from across the globe, and welcome to the 1448th installment of Short-Term Trading Live with Oscar Carboni. Good evening, traders. This should be fun. I got some great stuff in this video. As you know, futures trading can be and is, forget about can be, futures trading is extremely risky, causes substantial financial loss, is not suitable for most of us anymore, but we do still like to play, right? The ones who do like to play, that have risk capital and know the risks behind this game, put your stops in first and know that a stop in this business, nothing else will save you except for your best friend, the guy who's sitting there going, "You gotta get out! It's against you! You gotta get out!" Well, that's your stop, and it'll knock you out. So put your stop in. Most of the times, it'll work for you when you don't know what else to do. All right, so volatility through the roof. I've got a green Omni, and I'm clapping for that. A green Omni to start off again today, Thursday night into Friday morning. Emini, S&P, NASDAQ, sugar, soybeans, etc. I'll get into that. Last night's video, I told you soybeans, sugar, the dollar, blah, blah, blah. Did you see it all today? We're going to go over it tonight. So, what is on the board? We've got 3 topics. I'll get through them quickly, and we'll go right to the charts. For now, well, let's start that again. For now, almost all U.S. and European indices are above my OTAPMA, the Omni Trading Academy's proprietary moving average, and rock and roll there, right? We're getting green signals from Omni, the markets are above. But there are head and shoulders formations all over the charts, and I'm talking all over the charts. We'll look at those. And then the dollar index, it is propelling commodities like sugar and soybeans, just like I showed you in last night's video. It happened today, it's going to happen again tomorrow, and if they continue to push the dollar down, commodities are going to start to run. We'll get some commodity inflation, it'll give us more markets, more places to go play. Again, I will say I am on record this year, and I said it already about 2 months ago, that this is likely to be one of the biggest, strongest grain years we've had in quite some time. And if you ask me, it's already starting in the grains and in the softs, and I'll show you a few charts. Traders, you can find me at livewithoscar.com. It's a free live trading room where I help you understand the charts, get through the markets each day. I send you live signals when to buy and sell. You will find me there, livewithoscar.com. With no further ado, let's go look at some charts. Traders, the first chart on the Omni menu this evening is your Dow Jones Industrial Average Daily Bar. This is my OTAPMA, the Omni Trading Academy's proprietary, above. This is the 200 bar moving average, above. Fantastic chart, looks great, right? At the same time, never ever lose sight of the larger picture. Same exact chart, but the left shoulder head, right shoulder head and shoulders formation overlaid. Yes, we are through OTAPMA. Yes, we are through the 200, but there is the Oscarism known as the head test area. We must penetrate through the head test area, not fail and head back down. We must penetrate through and carry on in order for me to remove, do not fall in love with the upside off of my whiteboard. We are not there yet. The point is to make you understand this has been a head test that we're in right now. That is where we're at. We have not cleared this formation yet, but at least we're above OTAPMA and the 200 on our way into our head test. Next, and I kid you not, there are head and shoulders all over the U.S. indices. That was just the Dow Jones Industrial Average. Here you have the E-mini S&P. Wonderful E-mini S&P above OTAPMA. You gotta love it. But it is going for a head test. I mean, look. Shoulder, head, shoulder. The head test area is up here. You're not even there yet. You're heading for the head test. A long way to go before we break out. So let's hope we get right through the head test and carry on. But don't forget the larger picture. There are head and shoulders all over these charts. NASDAQ cash market just made it above my OTAPMA as of the close this afternoon, Thursday afternoon. Again, though, shoulder, head, shoulder, so something to keep in mind. But above, that makes just about every U.S. indice above. Let's look at other ones. E-mini Russell, the ETFM, the Russell June, right? The Russell 2000 daily bar gets above OTAPMA, builds a bull flag, blows out above OTAPMA as of Thursday, And here we are into Thursday's close, going into Thursday night, Friday's trading. You gotta love that, right? A bull flag above OTAP, a wonderful looking chart. So there are your U.S. indices, and yes, we're above OTAPMA. And then we go out to Europe. But again, you see this head and shoulders, how well it worked. Shoulder, head, shoulder, down we went. We got below OTAPMA, got hammered. They work really well. In fact, every one I've shown you so far is in play, and this one is one that happened. This is not in play anymore. This already happened, and look at the down move that ensued. The DAX now, the German DAX, European Index, it just kissed the OTAPMA on Thursday's trading. Just kissed it. Let's see if the DAX can get above. That would be all the major indices that we trade above OTAPMA, including Europe. That would be fantastic. Then you've got the dollar index traders. Here is the culprit behind the rise in commodities coming. Dollar index, another fantastic head and shoulders, and it worked really well. It didn't even give much of a head test. This day tried a head test and just fell apart. And then the down move ensued. Shoulder, head, shoulder, below OTAPMA, and it worked. Head and shoulders all over the charts. They do usually work well. Again, as I explained in last night's video, there is no technical analysis technique that will work 100% of the time. This is a fine art, not a science. But these techniques work really well, as I'm showing you in chart after chart. You cannot discount one if you're in the right shoulder and moving up. You can't just discount it. We know it's there, referring to emini S&P. This one already happened. That's your dollar index. Bearish head and shoulders did work. But the dollar moving lower and respecting that head and shoulders is forcing markets like soybeans higher. I showed you this chart yesterday, traders. We were down here. Look, it blew out so far. Very nice. This is what happened today, and this is tonight, already moving higher. So we blew out past this channel, as I mentioned, or I should say past the apex. You're at a pennant flag. Apex would be here where the two lines meet. I break my pennants down into 100, 25, 50, 75, 100, 4 equal quadrants. And then I expect a breakout somewhere in the 75% quadrant. That's what we're having. And in the form of a nice little Oscarism F flag on top of it all. F flag breaking out, very nice. Dollar moving down. You gotta like beans. This is what I showed you last night in the video, and look how nicely we've rallied. And then I mentioned sugar in last night's video. Let me show you the sugar. And look at this inverted head and shoulders. This is the opposite signal. This is a head and shoulders that would give you a buy signal. Look how well that worked. In sugar, and look at this monstrous F flag. You've been in this for, 3-4 weeks now. Look at the size of this F flag. And it is just running. At this point, it's a channel. Forget the flag part of it. Just a nice channel towards the upside after blowing out of a bullish head and shoulders formation, opposite type of formation that right now we have in our indices charts. So they do work well. The commodities are starting to go. They feel the dollar coming down, and that makes them go up, and it is working right now. Traders, pull your charts, do your own analysis, and meet me at livewithoscar.com. So traders, you've seen the chart. You've got my technical argument for why I have these topics on the board. For now, almost all U.S. indices and European indices are above OTAPMA. We need to get the DAX across. NASDAQ just made it across. Head and shoulders formations do work, as I showed you, and are all over these charts. Keep them in mind as the markets move. And the dollar index, if it continues to go down, it propels commodities up. And it's exactly what QE in Europe didn't need. They needed the Fed to raise rates. The Fed didn't raise rates. It counteracts what they're doing as for QE in Europe. So I am baffled at why Auntie Jay did not raise rates yesterday. I can't stop saying it enough. I am baffled at why she balked. Remember, I don't know where you grew up, but your daddy should have taught you something. Never, ever take out a gun unless you plan on using it. The Fed has a gun. It's called interest rate moves. Don't ask me why they waved it around without using it, but boy, that is probably not going to be the best thing that they could have done. We'll let the Fed do what they do, and we'll trade and do what we do. LiveWithOscar.com. I'll see you there. Remember, keep your emotions out of trading, and I know that is not easy these days, But one of the best things that you can do, as far as I'm concerned, is say this to yourselves every morning, every afternoon, every evening, while you're brushing your teeth, while you're in the shower, when you're cooking dinner, when you're on the bus. Just say it, especially when you're in trades, and you know what that is. Stops are in. Emotions are out. Rock and roll quartet back there. Thank you so much for your help, and I'll see you all at livewithoscar.com. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.